everyone. This is the week ahead. I'm Tony Nash. Normally we have a few guests here, and we had not planned on not having a week ahead this week because a couple of our guests are in Florida and we had the hurricane, but there's been so much coming out on Chinese economic stimulus that I wanted to do a really quick video for you all, talking through some of the Chinese stimulus, what impact it has, and so on. So you've seen over the past 2 or 3 days, several things have come out, and let me just start with some direct questions at the top, and then we'll get into the details. So we have a question from the Cactus where he asked, how can one explain China's continuing export strength? Is it being routed through countries such as Indonesia, Vietnam, et cetera? China's export strength is really on domestic deflation. China's exported deflation for much of the last 20, 30 years. They didn't do that, say, pre-COVID for a few years, but it's really come back because they have way too much capacity. You can look at everything from steel to manufactured goods. There's way over capacity. And when you look at social media posts and news in China, there's a lot of discussion of deflation and a lot of worries about deflation. So that's really how they keep that stuff up. There's a question from Rich Powell, possibly elaborate on this. Why won't stimulus reach its stated targets? Well, there are really a few different types of stimulus. And this is referring to a tweet I put out earlier today about the rail stimulus. There used to be, this annual PR campaign about rail stimulus coming out in China. And it was always this, this boilerplate announcement, and we never really saw it and always got pushed to the next year. Maybe a little bit got spent, that sort of thing. So that's the reason for that tweet. Now, there was very effective stimulus in, say, 2011, 12, where the Chinese government gave money directly to rural households to buy things like refrigerators and cars and those sorts of things. And that stimulated those segments of the economy. But the other parts of the stimulus in 2007-8 were really simply moving debt around. It's called evergreening. And so they evergreened the massive debt that they had built up before the financial crisis. And it's really never washed through. That has never been paid off. That's still on the books, as far as I know. It's hidden somewhere. But I'm not aware of that debt pre-2007 being cleared. So this stimulus that's being announced, including the $284 billion announced today, a lot of that is going to banks that will evergreen the debt that's been put on its books over the last 10 or 15 years since the financial crisis. So this is not stimulatory stimulus. This is maintenance stimulus. This is really to move debt from one balance sheet to another while maintaining the interest payment. So we're not necessarily going to see the big bang that many people thought. So let's look at a couple things. The first is Michael Nicoletos. If you don't follow Michael Nicoletos, amazing guy, very smart. He put out a bunch of different tweets this week about Chinese stimulus. Here's a screenshot of one of them, kind of outlining that first tranche of items that was announced. I definitely recommend you follow him. Look at his stream. He had another thread today about the stimulus and what's happening. So Michael's very technical, pretty amazing. And I guess what we need to look at next, I'm going to bring in some charts from CI Markets, which is our subscription product, our forecasting product. And so what I've got on here are all 1-year horizon charts. Okay, so first let's look at the Chinese yuan. And so what we expect to happen with CNY is appreciation. This is largely partly associated with the Fed stimulus and the easing in the US. It's partly on the back of some of the fiscal stuff that will come out in China. So we will see CNY spike a bit this month. It'll ease again going into the back quarter of the year. And then we'll see CNY regain strength in Q1 as we see fiscal spending around Lunar New Year. So you'll see CNY appreciate in Jan-Feb, and then you'll see it ease off in Q2 of next year. So this is just showing you some error rates for our CNY forecast. So we're pretty accurate. We show our error rates on CI Markets. So if you're looking to understand how we forecast, what we do, what the results would be. A lot of that is revealed in these areas. I wouldn't say the how, but what our results are. So if you're going to make an investment, we show you our error rate so you understand the risk associated with making that investment. And so this is available for everything we forecast, except economics. We don't do economics error rates because those numbers are revised so many times that we don't do error rates on economics. Next, let's look at the Shanghai Composite. We do expect, Shanghai's been down this month, and that's going to remain. Of course, it's rallied a bit over the past few days, but that general muted trend into the end of the year, we expect that to remain. We do expect kind of lackluster first couple months of 24. Again, that's partly owing to the Lunar New Year. Not a lot happens in Jan, Feb. And then we do expect things to come back up a bit in Q2 of next year. So what you're seeing in equity markets right now is really for domestic audience consumption. And here's why. You have real estate in China that has really fallen off a cliff. Many of those real estate owners in China are not going to regain the highs for a long, long time. And so this sugar rush we're seeing in Chinese equities is on some level to make those real estate investors feel like not everything is terrible with the Chinese economy. And so they'll get a little bit of bump in equities, but we're going to see some haircuts in both commercial and residential real estate. The state-owned banks will continue to maintain this debt, but the individual investors themselves will start to feel some pain on those investments. And again, with the Shanghai Composite, we show you our error rates and where we've been a little bit on the high side for the past few months, but you can see back years on how we've performed with the Shanghai Stock Exchange. This is looking at a China ETF, the GXC. This is the S&P China ETF. Again, we're not optimistic on China going into the end of the year. You'll see this bump based on this stimulus. This always happens when China stimulus is announced. And the real question is, at what rate will they spend it and how effective will it be? So most of it, again, is going to evergreen debt. So is that really going to hit the economy? Probably not. And are we going to see the full amount of that stimulus hit the economy? We probably aren't. A lot of this is PR and headlines that the Chinese government is very good at putting out. If you notice, all this stuff was lined up this week, Monday, Tuesday, Wednesday, Thursday, big headlines each day, so that there's a perception that a huge amount is happening. But in the coming weeks, you won't hear anything about this. So all of this is intended to kind of capture funds and really get your investment money into China. So if you want to put money into China, that's your decision. I would stay very nimble. If you're putting money in China, stay very nimble. Look at USADRs, look at ETFs. I'd be very careful of putting money in the mainland if that's something you can do. But just be very nimble and very careful. Recent conversations I've had with people in China, they've said these exact words: nobody has money in China. Okay, so nobody on the street, from their perspective, has money. So the velocity of money in China has really ground to a halt over the past several months. And that is really something to be careful about, because when velocity of money stops, people really kind of start to hoard things. And that's really what's happened on the street level in China. With the Mid-Autumn Festival, there hasn't been a lot of spending, and people really haven't splashed out. I know this sounds petty from a Western perspective, but things like mooncake purchases, wine purchases, these sorts of things really haven't been there like they have been in the past. So we don't see China necessarily coming out. Some of the stimulus will flow through. Some of it will flow through to lower income, middle income people who the Chinese government wants to purchase different consumer goods and discretionary goods. But I'd be very careful about expecting a big bang impact on China's industry broadly. And I'd be really careful about expecting an end to deflation in China, or at least the deflationary precipice that China's on. So I'm just going to keep this quick. That's it for now. Thank you guys very much. Have a great weekend and have a great week ahead.